Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2024, and we're diving into AT&T's latest earnings report for the third quarter of 2024. Joining us is John, a senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss AT&T's performance today.
Let's get started with a brief overview of AT&T. Known for its extensive telecommunications services, AT&T has just released its third quarter earnings report. John, what are the key highlights from this report?
AT&T's report shows a mixed bag of results. While there are areas of growth, there are also significant challenges that the company is facing. We'll delve into the details in the upcoming scenes.
Revenue and profitability overview. Let's start with the top line. AT&T reported total operating revenues of $30.213 billion for the third quarter, a slight decrease from last year. John, can you shed some light on this?
Absolutely. The total revenue saw a minor decline of 0.5% compared to the same quarter last year. This was primarily due to a decrease in equipment sales, which fell by 3%. However, service revenues remained relatively stable, showing a slight increase of 0.1%.
And what about profitability?
Profitability took a significant hit. Net income dropped to $145 million, a stark 96.2% decrease from the previous year. This was reflected in the earnings per share, which fell to a loss of 3 cents. The operating income also saw a substantial decline of 63.4%, coming in at $2.116.
Operational efficiencies and future outlook. John, let's talk about AT&T's operational efficiencies. What are the key points here?
AT&T's operating expenses increased by 14.4% to $28.097 billion. A significant portion of this was due to asset impairments and restructuring costs, which surged to $4.422 billion. This indicates that AT&T is undergoing some strategic shifts, possibly to streamline operations and focus on core areas.
What does this mean for their future outlook?
The company has expressed cautious optimism. While they are facing challenges, particularly in the business wireline segment, they are also investing in growth areas like mobility and consumer wireline. The focus seems to be on enhancing their service offerings and improving operational efficiencies.
Segment performance analysis. Let's dive into the segment performance. How did AT&T's different segments fare this quarter?
The mobility segment continues to be a strong performer, with revenues increasing by 1.7% to $21.052 billion. This segment also saw a 3.5% rise in operating income, driven by a 4% increase in service revenues.
And what about the business wireline and consumer wireline segments?
The business wireline segment struggled, reporting an operating loss of $43 million, a significant drop from last year's profit. In contrast, the consumer wireline segment showed robust growth, with operating income increasing by 22.5%, thanks to a 6.4% rise in broadband revenues.
Leadership commentary and strategic initiatives. What insights did AT&T's leadership provide in their commentary?
AT&T's CEO emphasized the company's focus on core services, particularly in the mobility and consumer wireline segments. They are restructuring assets to better align with their strategic goals, which includes divesting non-core operations and investing in fiber expansion.
How does this align with their strategic initiatives?
The strategic shift is aimed at strengthening their market position in key areas. The continued investment in fiber is a critical part of this strategy, as it supports the growing demand for high-speed internet services. This aligns with their goal to enhance customer experience and drive long-term growth.
Key takeaways. As we wrap up, let's summarize AT&T's performance this quarter. Despite some challenges, particularly in profitability, there are areas of growth, especially in the mobility segment. John, any final thoughts on AT&T's investment prospects?
AT&T is navigating a complex landscape with both challenges and opportunities. The focus on core services and strategic investments in fiber are positive signs. However, investors should be mindful of the ongoing restructuring and its impact on short-term profitability.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AT&T's performance in the comments below.